Everyone, ooh, hello. Thank you, everyone, for coming to our event today. I am delighted to welcome you to Bruegel. My name is Rebecca Christie. I am a non-resident fellow here, as well as a columnist in Brussels for Reuters Breaking Views. I am delighted to be hosting this panel on open banking with Giacomo Casolari coming to us from the European University Institute in Florence, Magda Bianco from Bank of Italy, and Jan Seesens from the Commission here in Brussels. We are going to hear some short presentations from them about where we stand and what's going on. I gather there is a new journal issue coming out with lots of fabulous discussions of this topic, and they will tell you about that. Then we will have some questions and answers. I hope that you in the room will ask us questions, also hoping to get some questions from online. We are on Slido. There is a link to it from the website. The code is banking. And very happy that you all were able to join us today. Thanks.
Okay, so here we go. Thanks a lot. There should be some slide on. Here you are. Yes. So thanks a lot for having us today. Let me start with an issue of the new journal. A new issue of the journal on European economy that you see posted in the slides here. Which is related on the topic that we are discussing today, open banking. And we're going to ask whether it's going to be the next big financial revolution or not. Just a way of introduction, what is European economy is a relatively new journal that is intended to be a high-level platform for open debate and discussions on topic related on banking regulation, and involving both the academia, institutions, and business. We have monothematic issues on different topics. The topic of today is on open banking, and it's an independent journal, and the publisher is Centro Studi Luca Dagliano in Milan. We have three co-editors, myself, Giorgio Barba Navaretti, and Alberto Pozzolo, who are sitting in the room here. And we are backed by a group of people in the advisory board. You may recognize names of people working on banking. So the issue we're talking today is, as I said, on open banking. As usual, the issue of the journal is organized in terms of some material from the editorial desk. Then we have sections on numbers and institutions and literature review on the topic. So if you are interested in digging into open banking with some more details. And then we have articles that come from people working, as I said, in academia, but also in institutions and in the business environment. And you have the list of contributions of these issues here. Let me also mention that the journal is completely open source, so it's available online, and you can download all the articles, and you can subscribe the journal. So that's much as for the little bit of advertising. Let's start with open banking. So in search of definition, the idea of open banking is to have a set of actions that allow third-party firms, as you see here, either regulated banks or non-bank entities, that have access under some customer consent to bank-related data through API or application programming interfaces. So these API are standardized interface that allows seamless interaction. So, as I said, in search of definition, this is complex, very complex definition. So what is really about? So imagine that you have a bank account in the Royal Bank of Scotland, and you want to connect this information with an aggregator, like could be Yolt, for example, banking aggregator and payment by ING. Then what you have to do, through your app in RBS, you give consent, specific consent on the type of information and data you want to share with IOLT. Then you have an authentication phase that goes through the app of your bank, RBS. Through the authorization, you specify for how long and which data you want to share with the data aggregator, and then with these three steps: consent, authentication, and authorization. You have shared your data, banking-related data, with external third parties. That's the idea. So the number of open banking third-party providers, that is external subject, external with respect to your bank, that have developed in Europe is more or less 120 per country on average. UK, that started earlier perhaps, or with more effective policies, has more than that. You see that the total number is increasing. There is a jump around the COVID, the pandemic, because people started to think more about this, the necessity to use these tools. In the issue, we have briefly studied a possible correlation between bank size and the number of access to API these banks currently have. We're talking about a relatively small number from the side of banks. So, but you see there is kind of correlation between how large a bank is and how ready the bank is to open through API some of this information. So essentially the idea is that in traditional banking you would have that the information generating through the banking relationship remains within the bank and is going to typically used exclusively by the bank, enjoying some benefits for the bank itself, to some extent also for the users. With open banking, the idea is that really this idea of opening access of banking data to third parties, and the idea is to create through this information, through this flow of information, new options for bank users. And it's remarkable to know that it's an evolution that has been pushed as probably almost entirely a regulatory initiative. So everything started with PSD2, the Payment Directive 2 in 2015, and almost at the same time the Open Banking implementation entity in the UK in 2016. Then this process of open banking has developed. As I said, we're currently more in UK because of the details of the implementation. And overall, we can say that it started with open banking, that is mostly with information on payments. But now that the Pandora box has been opened, we are going to see much more on that, for sure. Overall, the punchline that we take in this issue is that open banking is really a promise to increase market competition and contestability, financial innovation. Here, Ian will certainly have to say something about that, financial innovation and open finance, and financial inclusion. And Magda is going to say something about that. There will be large potential welfare effects for users and in terms of efficiency. There will be also trade-off. There is an issue. There are issues referring to privacy, security issues, implication on stability, and the effects of efficiency and market structure. And myself, I will spend a little bit more of my time into the implication of market structure. And we have the impression that regulation will play a major role because open banking may actually lead to significant change in market structure. And then it's probably a good idea to try to think about complex effect of information sharing, in some cases also possibly with ex-ante rules. So the idea of enhancing competition is that, as as you can imagine, giving access to this data opens the door to new competitors that may enter the banking market and providing new product as well. Um, if it's going to be sharing information with just the incumbents, then we cannot expect very large effective changes. So the changes will come when the data will be shared, if the data will be shared with the new players. And new players, then really the impact will depend on the identity and the characteristics of these new players. Some of them will have, thinking about, for example, fintech technology advantages over incumbents, and with the implication that they may have the ability to offer these new services differently from traditional banking institution. And we may have the arrival of big tech firms that may have maybe granted access of data, and then there's probably one important type of beneficiaries of open banking. And overall, we may have a push towards what can be seen as a platform model in the banking environment. So the market structure one can imagine is a move from the typical vertical integration structure that we have seen in financial intermediation so far towards more horizontal industry where there are new players that control consumer interface with many financial service providers operating and offering their products. So briefly, the platform model, the idea is that you can have a platform that collects, that does the matching between financial service providers and consumers or financial service users. The platform doing the match between these two sides is going to collect information. And then the question is where this information will remain, whether it will spread, also thanks to open banking or not. Now, information, we know it's a complex object. First of all, and that's an immediate implication of open banking, we know that when information is shared, then there may be less incentives to produce it. And in the anticipation of information sharing, you may think, and there are some academic papers that look at this possibility, that the incentives to acquire information, to monitor, for example, the activity of borrowers may be reduced in the anticipation of the fact that some of this information will be shared with other parts, potentially also competitors. Okay, so there is already some preliminary empirical evidence of this fact that the increase in customer data sharing, this paper by Babin and others, increasing in customer data sharing fosters competition and innovation at the cost of lowering ex-ante information gathering, which, thinking about financial activities, may have a significant implication. For example, we know that information is important for financial stability. Now, if a lender monitors less or does less screening, again, in the anticipation of the fact that some of this information will be shared with potential competitors, there will be less monitor, less screening, and we know, since we are talking about financial markets, what could be the implication in terms of reduced stability of the financial sector. So you see, we are trying to cover the pros in terms of competition and the cons or the risk, some of the risk in terms of implication for data sharing. So I'll skip on financial inclusion because I will leave the floor to Magda. Now, do we need regulation? Well, it all started with regulation. No? Open banking, as I mentioned before, it started with the push from the regulatory side. There are several dimensions on which we need some regulation on privacy and cybersecurity, potential conflicts between, for example, the PSD2 and the GDPR in terms of consent and cross-use of data. But what we think is very important is the need of regulation in terms of anticipating, as we were saying before, what could be the new market structure once we have data sharing the arrival of platform intermediaries. And here the idea is really to take stock of what we have learned from digital markets in general, where we have seen by means of network externalities, significant market concentration, and some case we also talk about market tipping. We really have very few operators. Now, let me skip on this. So for digital markets, we have had quite a bit of discussions that was developed in some recent advancement in the regulation, in particular in Europe, the Digital Market Act and the Digital Service Act, that have implications for large platforms. And we think in the financial sector, we have to think about something related to this approach, which is an ex-ante approach that takes into account the fact that once you have a platform model, which is something, as I was saying, we can expect from financial market as well, once you have this actual implication of open banking taking place, there is a need to think about the fact that digital markets, platform models are associated with strong network externality. So briefly, you may have that individual on one side of the market may be quite interested in joining a platform that has many individuals on the side of the other side of the market, and this creates an eternal circle that generates strong network externality, and the very same platform you start with becomes the best option for all sides of the market. Okay? And it becomes very difficult to enter in these type of markets, and we have seen with large platforms that are normally called GAFAM. So the Commission decided that it was necessary at this point to have these new regulations, and it's an interesting new approach, an ex-ante approach in for managing, controlling to some extent the market structure. So we think something like that is important for financial markets as well, and it's possibly a natural implication of open banking, but it's more an open question for open banking, the implication of open banking. We don't know exactly whether and at what speed financial markets are going in that direction. So as I said, it's not only going to be open banking and referring in particular to the first steps, which was about payment, information on payment activity. Is going to certainly expand in other areas, which is normally indicated as open finance, where there will be other dimensions relevant for financial markets like mortgages, savings, insurance, pensions, and also other sectors. And also there will be other type of data which are called lateral data or alternative data. Think about the possibility to combine bills of energy, water, mobile, and the data that come from social networks. Now, again, that's a complex environment. We don't have an obvious view what will be the implication of all this, and I hope this will be left for our discussion. Here we go.
Thank you very much. So, good afternoon, and thank you very much for this invitation from me as well. It's really a pleasure. Okay, again. Thank you very much, and good afternoon to everybody. It's really a pleasure. I will say a few words about the relationship between open banking and financial inclusion. And I have a few slides. Here they are. And this is joint work with Maria Iride Evangelisti, I must say. I will say a few words about the relationship between financial inclusion and innovation. It's not a monotone. You cannot hear well? It's okay? Okay. Okay. Yeah. And
And the second step is, how much open banking can actually benefit financial inclusion and hence the most vulnerables, which are the conditions. And the general point I will make is that this specific objective, the objective of financial inclusion, has been somehow overlooked also in the regulation pushing for open banking. One word about financial inclusion, some definition. In general, financial inclusion is defined as a condition in which households and firms have access to formal financial services, and not only access, they are actually able to use them according to their needs. Well, some years ago, the accent was really on access, people being able to access financial services, whereas now it's clear that access is not enough. You really need to be able to use financial services according to what you really need. Financial inclusion is by now widely acknowledged as an instrument, as a tool to increase the well-being of people, of households and businesses, and more generally, their economic empowerment. There are now quite strong empirical evidence in this direction. And it's also documented as an enabler of financial sector stability and soundness, even if up to a point. Well, in this area, overall innovation, and specifically, obviously, digitalization, which has received a huge push during the pandemic, is considered a major driver of inclusion, creating huge opportunities to facilitate access to formal financial services. But there is also now wide recognition that this comes also with risks, especially for vulnerables, for the unbanked or the people who do not have the tools to access consciously to financial services. And also to the fact that there is awareness that also access to the financial services is not per se guaranteeing that this is quality access. So the general point is that innovation is obviously good, is great, but it must be somehow governed if we want it to ensure a positive impact to basically everybody. Open banking. Open banking are, well, I don't need to define it because Giacomo did it, is potentially ensuring benefits for those who are financially less included and more vulnerable through a number of products and services that might be offered based on open banking standards. So it offers really the potential to further include people. For example, through the payment initiation services, the possibility to buy online and saving costs, also without needing a credit card, or settling recurrent payments at due dates, avoiding penalties, or being able to top up prepaid cards or phone money accounts, avoiding penalties or extra costs. And on the account information services, the benefits might come from the use of professional monitoring of your accounts, from the advice on financial management and deadline planning, avoiding overdraft or penalties, on the possibility of having rating services based on the monitoring of the account, or using budgeting tools to plan payments, favor savings, and also increase protection from fraud and scams if it's possible to access your accounts and hence look at strange movements in your accounts, for example. However, there are howevers. We find at least 4 points of attention. The first is that, online banking requires online account by definition. And hence, in a sense, unbanked are out of reach. So open data in the future might facilitate access, but at the moment, in a sense, open banking works more on, say, the intensive margin rather than the more greater inclusion of people who are excluded. Second issue is transparency and trust. We know from various surveys that excluded or underserved are typically less financially educated and are less able to understand the characteristics of the services, and this leads to mistrust towards financial services, which is an issue for including people. Third issue is the issue of management of personal data. Well, typically we also, as supervisor, we are used to say to people, do not share your data with third parties that you don't trust. And actually, in many cases, produce an issue of gross negligence if you have given your data to someone who should have not been trusted. So this is typically a good behavior, not sharing the data. But in open banking, of course, you're supposed to share your data with trusted counterparts. Again, for people, especially for people less financially educated, to understand exactly with whom you are sharing them and whom you should really trust might not be too easy. And fourth, there is an issue, a possible issue of costs of services, at least as long as competition doesn't drive them really low, because again, high costs of these services might again disadvantage or exclude the most vulnerable, who typically have lower incomes. Now, we know from some surveys that actually, at least up to now, maybe UK is an exception. But up to now, open banking has been mainly used by financially developed and highly skilled customers. There are surveys showing that the people who have accessed open banking are mainly already very much used to digital finance. There are people who are really keen and open to financial innovation. And actually, the surveys also find that the preference for anonymity or the reluctance to share data actually negatively impact the willingness of people to use open banking. And there is also an older study, it was actually before the real development and diffusion of open banking, that finding in the Netherlands that individuals tend to trust more their own bank than third parties. Well, the next step is trying to search for the reasons behind this, why, in a sense, we haven't, or there are still obstacles to financial inclusion, to developing all the potential financial inclusion from open banking. And to look for these reasons, I here use and try to compare the European PSD2 provisions regarding open banking with what we have defined a menu of policy options for digital financial literacy and consumer protection, which is a set of policies, recommendations, best practices, which have been developed by a working group of the G20, which is called the Global Partnership for Financial Inclusion, which actually deals, obviously, with financial inclusion. And under the Italian presidency has developed, as I said, a set of best practices to favor financial inclusion in a very digital world. And on the left, you see a list of what we found were good policies, such as favoring protection by design, that is pushing intermediaries to produce, to offer products and services which are already designed since the beginning to include, to be useful for customers. Second, embedding financial inclusion objectives in innovation policies, such as having in sandboxes or innovation hubs a specific provision leading to financial inclusion. expressingly addressing risks of online frauds and scams, and risk management of personal data, which obviously with digitalization are a huge issue, especially for vulnerables. Having effective redress mechanisms, which ensure that if something goes wrong, customers know what to do and have a direct protection, and designing effective financial education programs to help exactly those who are less literate. Well, if we compare the PS2 provisions for ICE and PIS, we find that in terms of favoring protection by design, we do not find any mention of the need to evaluate the customer profile when offering AIS or PIS, nor actually any reference to put specific attention to vulnerable customers. Oh, sorry. Account information services and payment initiation services.
Excellent. Yeah, and I think you can just go through the differences because we heard the thing, and I want to make sure we have some time for Jan to speak. Thank
yes.
you.
Yes, sorry, I thought the overview by Giacomo, but it was very quick. The first offers information services, that is, the customers can provide the possibility for a third party to access their own data, the data referring to transaction data referring their own accounts, but just information, so that the third parties will be able to offer some other services to the customer. Whereas payment initiation services are services, again, offered by third parties after the authorization by customers, but which are specifically payment services. That is, they can go through another subject which is not your own bank, your own intermediary. So we don't find a specific indication for this. Second, embedding financial inclusion objectives in innovation policies. Again, we don't find any mention in the directive of the objective financial inclusion as well. It's obviously, as Giacomo was saying, there was more a clear competition objective in the directive. Concerning actually the risks of fraud and scams, there is quite a lot of attention, because actually there is a clear responsibility of the intermediary, of the bank or the first intermediary, to refund the customer if something goes wrong. And this is a very strong rule that protects strongly customers. Redress mechanisms are provided for, so this is again a plus of the directive. However, regarding financial education programs, there is no specific mention again of the need to accompany this revolution, these changes with specific financial education programs. So, with these reflections, we might have some lessons then for the future path, and these are 4 possible adjustments that is relatively simple to implement. That is, include financial inclusion specifically, explicitly as an objective. It might even be just in a whereas of the directives, but make it clear, make it evident, sometimes helps, also helps the intermediaries to keep it into account. Provide for tools for clients, simple tools that help them to monitor the use of their data and understand what's going on, who is going to use them, and possibly being able to revoke the authorization in a quick and easy way. Third, communication on the characteristics of the services. Actually, in the directive, I think there is an issue of producing by the Commission a leaflet explaining the PSD2, but only regarding payment, electronic payments, and nothing about the open banking, and this again might help. And of course, mentioning that actually member countries should really think about having specific financial education initiatives to accompany the evolution. And then some more possibilities or thinking, which is a bit wider, of course. Yeah. Right. Okay. So these are. Yeah. So these are 4 points for the future: extension to different financial services, and I guess we will speak about open finance. Data reciprocity, again, Giacomo mentioned it, among market participants. Here in the open banking provisions, there is a very strong asymmetry in favor of the newcomers. Specific attention to cost distributions across market participants. Here again, the costs are mostly on incumbent. It was a competition issue, but big tech might pose an issue. And then the absence of standardization is an issue. It's not obvious which is the right model, but it's an issue. So to conclude, we do need greater attention to the needs of the most vulnerable. Digital education and data protection are an issue. And we have examples where mechanisms that allow incumbents and new intermediaries cooperate in a sense for the benefit of customers' work. I think the UK example is one of these. So a lot to think about for the future. Thank you.
Thank you. This was an incredible amount of information from both of you, and I'm still processing it, but want to hear from Jan Seesens from the Commission. Thank you.
Thank you very much. I hope that the audio here works well, or maybe it's the opposite. No, okay. Now it may be too loud. Is it better like this, maybe?
Yeah.
Yeah, okay, I will do that. Indeed. So thank you very much, Giacomo and Maria, for actually excellent points. Maybe just 3 thoughts I would want to add from the European Commission's side, or from also my personal perspective, working on this question of open finance and actually the data economy at large. Maybe starting with the first one a bit on the question of the platform economy, the second one a bit on then the role also and what's in there for consumers, and then the third one on, well, what framework do you need in a way. So on the first one, Giacomo, I think you've pinpointed quite well what are actually the trends of the data and platform economy, which we are seeing, and which is of course also actually developing in banking every day, I would say. I think the one point I would make on this from our perspective is that this is a trend which is there and which exists whether even without the PSD2. I think the big trend would have been there anyway, basically. So it's a trend which is not caused by regulation, but it is basically there, and it shapes, of course, consumer expectations. People expect more and more, indeed, the one point to go. They expect more and more. If you go to one access point to get your products, you get there everything. It works quickly. It works well. If you spend too much time in your app, let alone even if you need to go to the bank branch for younger people, that is already something which actually sometimes threats them off, basically. So this platform economy, there are economic dimensions to it. There are kind of social, societal dimensions, and how it shapes actually the behavior or the expectations of also clients to finance. So in that sense, I think the question from the perspective of the regulator is more, well, what kind of data economy and platform economy we want, and how do we put the right framework there? And in that context, from our perspective, we do think that that data sharing is and must be part of a well-designed framework for the data and platform economy, because the natural tendency, of course, in the sector is towards concentration, and that means logically very simple. The more data you have, the broader the set of data you have, the more products you're able to offer, basically. That favors big players. And the more small you are, the more narrow you are, the more challenges you have, basically. Now, we do have an economy in Europe which is diversified, and I think we like it like this. We like that we have many smaller players. The same applies in finance. 6,000 banks, I think, currently, not even to count all the payment providers. Many of them are small players. Yes, we have some larger banks, but I mean, if you look outside beyond the banking sector, even they sometimes appear almost small compared to some of the very large gatekeeper platform companies. So in a way, we have an economy in Europe and a financial system which is very much based on diversification. And the only way, essentially, for such an economy actually to play a leading role in the data economy is actually to share data. If everybody continues to do what they did very well in the past, to have your own silo, that will create much, and they will face, certainly in the retail business, more and more challenges. And I think that's the very basic thought, I think, behind the data strategy in Europe and the Data Act, that basically data sharing and a responsible framework for data access and use is actually something which will support the competitiveness of the European economy. And I would personally think exactly the same is true also in the financial system. Now, the second point I want to make, indeed, is from the consumer perspective. Then, indeed, I think we have there, and that's a nuance, an important one, which I want to add. We have very different expectations. Some people want as little data as possible to be accessed, to be held, and they certainly don't want it to be shared. And that's, to be clear, that is perfectly fine, and that is an attitude which everybody needs to be in charge of. That's the very principle of our data policy, that everybody needs to decide, him or herself, who has access to the data about him or her and for what purposes, basically. And I think that's one perspective and principle which an open finance framework also needs to actually look at. And I think the PSD2 and the GDPR are there, basically, but it needs to be put in practice. Data is only shared and accessed if there's consent, based on informed consent. And I think you've given a couple of suggestions as well how this can be improved in practice, for example, in terms of consent management tools and other ideas, basically how this kind of theoretical idea and principle we have in the GDPR and everywhere can be actually transformed into practice. And I think the second thing is, however, the second corollary is also, well, if there are consumers who basically say, I'm fine for my data to be shared, I don't want anymore when I go to a bank and want to seek financial advice, I don't want to fill out any more 30 pages of paper, spend half an hour on that. I'd rather, I'm fine for my data to be shared as long as I spend only 1 minute on this and not 30 minutes with a paper. That is also needs to be respected, basically. So if that's the case, and I think it's in the very interest of the consumer, because these people, if you don't offer them, let's say, easier, accessible, and quicker advice, very often they will just not seek advice. They will just do execution only. They will buy just without advice, basically, which is not always, let's say, in their best interest. But it's also in the interest, of course, of the financial industry, actually, to allow this more seamless and integrated and data-driven, actually, advice, because otherwise they will lose more and more clients, actually, also in their services. So in a way, for this second part of the customers and the clients who actually are digitally native and who expect finance to work as easily, as quickly as a computer game or I don't know what, for them, indeed, I think an open finance framework needs to allow the possibility and actually both the legal possibilities and the technical facilities actually for data then also to be accessed and shared across institutions. And I think that's a bit also what the PSD2 has been looking at in payments, and what indeed we have been now one by one also be looking at from the European Commission in other sectors in a way, whether that is in the Digital Markets Act, also in gatekeeper platform data, IoT data and others, and we'll also look in finance. And so I think those are a couple of points, I think maybe where we think that from our perspective that indeed we need to work step by step. I think PSD2 was an important piece. We need to carefully gather the experiences. I think it has certainly created a certain know-how in Europe, also in the banking sector on the issues of data and data sharing, actually an important know-how I find personally. It has not always worked as expected. It has been probably more expensive than some people thought. How can we learn from that, basically, and what does that mean for the rest of the financial sector and financial data, whether that is investment data, whether that's insurance data, advice based on it, and etc. pp. We need to look at questions of financial inclusion or exclusion as well. I think that's a very important topic, because indeed one story is informed consent. So your data is only used when you actually explicitly and shared when you agree to it. But even then, of course, it creates problems, and you mentioned many of them. I can add another one. What about data poor people who basically do not have all this data actually for, let's say, which maybe the financial institutions are asking for, and will they over the long run then maybe have more difficulties actually to access financial products? That's another, I think, important financial inclusion point. So I think those are also items we need to look at when kind of making sure to have a framework which is responsible for data sharing and data access in finance in Europe. The digital skills part and the digital literacy is very important, and I think we have quite a number of, let's say, work streams. Just 2 weeks ago, the Commission actually published a broader digital skills package, because many of these skills actually which you need to participate in this are important for banking, but also for many other parts of the economy. So it's actually a broader challenge to make sure everybody or many people have them. And last but not least, and to close on that, we think, as on the skills, also more generally, this is all work which, yes, we need to look at we need to look at payments, we need to look at the financial sector at large, but we also need to look at the economy at large. So we see very much the work on open finance also as part of a broader work on open data, on data access, if you want, responsible data access. It's not something where everything is the same, so you will not be able to treat health data exactly the same like financial data. They both have their sensibilities. So in that sense, sensitivities, in that sense, one size fits all won't work. But what we do need, and I think that's what indeed the colleagues in DG Connect are working on strongly, we need to put in place the building blocks in the different sectors, the regulatory frameworks, and that's what we do in finance. We've made proposals in health data. We have made proposals indeed on IoT and others. And then basically once these are the basic building blocks basically, and then indeed we need to build the bridges and link them up basically. Without the basement, the fundament, you can't build a bridge, but at the same time, if you only have a fundament, then basically the thing won't work together in a way. So both is needed, and I think, the work, way we see open finance, the work on this is indeed that it will be one of these building blocks together with the PSD2, and other colleagues are working on this in other areas, and that's then something which needs to be linked up.
Thank you. Just the themes that really jumped out were that there's been so much innovation, there's been so much progress, and that it has really heavily favored incumbents, incumbent banks, incumbent technology companies, and incumbent customers. And so it sounds like the challenge here, just listening to you, is going to be getting new people into the system and making sure they're protected, getting new consumers in, getting new startups in, and making sure that consumers are protected using unfamiliar names, as well as that companies have a level playing field. Jan, are you looking at this sort of expansion with what the Commission is doing, and when can we expect to see your proposal?
This is an interesting one. Who are the incumbents? Because I mean, actually, traditionally, I mean, look at the traditionally, it's in the financial sector, industry side, it's maybe the banks. I mean, who knows how this financial system will look in 10 or 20 years? I think quite a number of you have read maybe a recent article in the FT on Apple's plans in finance. I think quite interesting. Exactly. But the same on the consumer side. I mean, you can say maybe more the older generations are the wealthy, you can say the incumbents in a way. But in the digital world, maybe it can turn out very quickly. So I think the one thing I would say is that this notion of incumbents is a bit in development, but not to avoid the second part of the question. Basically, so on the open finance regulatory framework approach, I think we are working. Indeed, we've done a lot of consultations. We had an expert group working on this. We've done a very thorough review now on the PSD2, and so I think we're currently planning to have. I think our commissioner said there's also legislative proposals on this before the summer, which would then indeed kind of both further develop the PSD2 and indeed also look at the broader question of data access and use in the financial sector.
Do we have any questions here in the room? While you're thinking, we do have one online. It's actually several questions, but they're good, so I will ask them. There is a question, what is the conversation with DG Grow? And then also, what about international things, banks outside the EU, users in one jurisdiction with rules in another one? Magda, you touched on this in your proposal. There's a lack of global standards. Would you like to talk about that a little bit before we go back to the Commission? Yes, international standards.
Well, actually, with the outside the EU, it is still an issue because the protection is not as strong as the one within Europe, where we have sort of mutual understanding about how the rules are basically the same, and also the individual protection mechanisms, that is, redress mechanisms, can be accessed quite easily across Europe. If you use online products that come from abroad, from outside Europe, the protection is much lower. So there we do really need to rely on higher financial education. That's the main protection in this case. So you really need to be very careful to understand what you're doing, to read carefully what you are signing up. And I think here we have a major thing, which is about sharing of data and consent. This is the main mechanism now, and I'm not sure whether it's really working well. We all know what we do when you need data, when you need to access something which might be financial or not financial, you tend to give your consent very easily. So again, awareness there is becoming a huge issue because there are, as you were saying, different kind of customers. Some want the quickness, the easiness. Some others do not want to share data at all. So how do we balance these two different needs is, I think, an issue we haven't solved yet.
So I think small comments on this global issue. I think it's very important. So one of the causes of success in UK was that the largest 8-9 banks were forced by CMA, by the Competition Market Authorities, to in the environment of open banking to set up a common standard for application for this API process that is the technology in a sense that is used to access this data. And the fact that they were developing a common standard clearly simplified things quite a bit. Now, we're not seeing exactly the same approach in Europe. And if you think at the global dimension, we really risk to have segmented markets because of incompatibilities.
And an API is an application programming interface. It's the way that you connect with somebody else's thing when you're making a thing for your customers. Jan, would you like to talk about DG Grow?
I always like to talk about DG Grow. I can only guess what the question is exactly about, but I assume this is about also data sharing in the broader economy in a way, including, let's say, the industry and other parts in a way. And yeah, that's absolutely, we are in actually, that's the interesting part of this data files, that we are in conversation with many colleagues across the Commission, actually, whether that's DG Grow, whether that's DG Ener, whether that's actually DG Sante and others. And of course, we look and I think, for example, the expert group which we had put up, or which we still are working in our financial sector on the data, actually had put out a number of use cases where they would also like to combine actually financial data with non-financial data. And I think we're following up on all of them with the colleagues in the various DGs to see whether there are obstacles, things can be done. And I think indeed, let's say in the area of more industrial products, if I can say so, of course, IoT data is, I think, one quite relevant part where we have already made quite good proposals, I find, in the Data Act. I think we're also looking at the area of car, let's say, data, spare part data and other matters. So yes, we have a lot of current conversation, and the conversation is about, indeed, what are the possibilities to also make accessible data in other sectors. And that links also to the question of reciprocity, which was mentioned. I think for me it's important that this is, I think it needs to be looked at as, let's say, more, I would say more of a kind of everybody moving roughly overall at same pace in the same direction, basically. So data sharing cannot just be something where one sector like finance gives access and others take access. I think I would warn, looking at it in a kind of narrow sense, very often maybe I may be interested in Rebecca's data, but Rebecca's may not be interested in mine, but more in Giacomo's, basically. And so in that sense, it shouldn't be like, I get your data, you get mine. I mean, that is not the way the data economy would work. It needs to be, I think the approach needs to be more about looking at all the sectors actually together. And then there was a question on the element of fraud and new forms of fraud and protection of consumers. Just very quickly, I mean, yes, I think the strong customer authentication has done quite a bit, and I think in Europe we are leading on this in this area. Now, of course, as everything in the PSD2, we are looking at it, and this is my colleague Eric who's actually working on this very a lot. Has it worked? Was it worked? What were the costs of all of this? Basically, what's the cost benefit? So that's, I think, exactly what we're looking at. But overall, I think on the general topic in Europe, I think we have a quite advanced and quite, compared to other jurisdictions, also quite state-of-the-art system, I would say.
Yeah, if I may add on
Please.
this, I think already under PSD2, the protection for customers from fraud and scams is very high. And well, there are both security standards, which are very, very high. So if I remember well the data, the amount of frauds within the payment system is 0.00%. So payments are very secure in Europe, and redress mechanisms work quite well because there is a very strong responsibility mechanism that puts it on intermediaries, on incumbents. So maybe they are not very happy about it, but for customers it works. But of course, there are various very, very new forms of fraud. It's very difficult to sometimes to understand them, especially for less financially educated or older people, because...
Do you see a need for new kinds of licenses for new entrants so that they are having to follow the same rules as the incumbents?
That I wouldn't, I don't think so, yeah.
I was really interested in your presentation in saying we can use data for other things like mortgages, like finance, like things like that. Certainly in the US, the credit bureaus control a lot of that information and the consumer doesn't. So does Europe need to take some of the elements of the US credit bureau model to expand access to services?
Well, the credit bureaus exist also in Europe, and they are, of course, a very relevant source of information for intermediaries, for banks. The thing is that open banking, open finance, open data might allow customers who have not a history in credit registries to access finance, because credit registers provide a history and of good payers and bad payers, but for those who are already within the financial system. So the challenge is to get those who are unbanked or small businesses who do not have a credit history to access the systems through other data. Transaction data or data that come from your being a good payer through other systems. Yeah.
What do you think? Do we have the systems to get new people into the space, new providers, without breaking these promises on fraud and other things?
Yeah, so I think so, but I was thinking, if you think in digital markets, what happened, we have seen a lot of discussion about the fact that consumers in digital markets are essentially sharing their data for free. Okay, so there is no remuneration in digital market for the data that the tech platforms are collecting, and yet in a discussion, and probably this is a question for the both of you, in the discussion for open banking, there is sometimes this idea that we empower users, consumers of financial service, with their ability to decide and to monetize on their data. But if we look at the experience on digital markets, we haven't seen anything like that. The reward comes typically with free services, like free search activities or recommendation activities by platforms. So it's more of an in-kind. And we're not used with that in financial markets. And I have the impression that there is too little discussion on this. So this data sharing is pushing financial markets, in my view, towards what we already see now. It's happening in digital markets, and I don't see a close connection, closing the gap between these two sectors enough.
We have 2 minutes left in our official. We have a question from the room, please. Yes, if you could wait just a second for the microphone and introduce yourself.
Hi, Ala from APCO Worldwide. An open question really for everyone. If I ask you to look at in the future, in the next 10 years, what is a successful open finance framework? Is it asset managers competing with insurance companies? Is it like, what exactly does it look like? What is, in practical terms, that is open
What a
finance?
great question for us to end on. Let's go with Jan, and then Giacomo, and then Magda.
Yeah, it's a great and a hard question to end on as well. I would say 2 points. First of all, that indeed at least a large majority of our European citizens have the impression that indeed data is used the way they want it to be used. Basically, that's for me the first criterion, or the first kind of benchmark. And I think the second benchmark would be for me that in Europe we keep both an innovative but also a diverse indeed financial sector and economy going forward to the data economy, which is kind of at the forefront, but also, let's say, tackles issues of concentration and remains diversified as it is today in Europe, the economy.
You said from Apple. Did I understand well? Right. So because I thought the question was for you then, more than for us. Certainly, I would say new business models. This is taking us to new business models, and we have to be prepared for that. And I'm not sure that we are learning enough from what we have seen in digital markets, as I was saying before. So there will be certainly new services, new types of services, new type of players in financial intermediation, financial markets in general. And we have to learn, I think, quickly. To some extent, the experience that we had in last months with tools like ChatGPT showing up and changing our lives in a matter of weeks could be something luring there for financial markets as well. Even if financial markets were, quite slowly, although steadily changing, that may be something that we will see dramatic changes on.
Don't have much to add after them. Well, it's a major challenge for the future. Actually, there are some experiences in emerging countries of open finance already that moved directly into open finance, jumping beyond open banking. But it's too early to see how they're working. But the plan is actually to have exchange of information, of data, also not just within the financial sector, but also with other data producers like utilities and telecoms. And the expectation is that, these are also models where there is reciprocity. There is no disadvantage, let's say, for the incumbents in the sharing of data. And the expectation is that there will be new services also for the less banked, the unbanked, with the possibility to use their data in a productive, in an inclusive way. But it's too early to judge whether this worked. Of course, I think when we go to that model, the needs for regulation and for protection increase a lot, really.
Thank you so much. Thank you to our wonderful speakers. Thank you to our in-person audience. Thank you to our online audience. This will be replayable later on all of Bruegel's channels, and we hope to see you at the next event. Thank you.